Yeah, so I guess what we wanted to do tonight was have a look at the market update. There's so much noise in the media at the moment with doom and gloom and the skies falling in regards to the property market. So when all of this information's coming, it's a bit of an overload and you're reading different articles from different people, and it's a little bit overwhelming as to what do you take in, what do you disregard, what do you take as gospel. So when I'm looking at all of this stuff hitting the media, I think, well, I want to have a look at the real numbers, have a look at the actual data that's come through and make some informed decisions on where we think the market's at and what do we think's happening. So I generally go to CoreLogic. They've got some good reports that come out, and I've just picked the eyes out of their last quarter slides and data just so we can have a chat about that and sort of get a bit of a picture from their point of view where the market is and what the actual numbers are telling us, as opposed to the sky falling in. If you're reading the newspapers in the last couple of days, it's been frantic in the last few days. So we'll kick it off. So Sydney's recorded the largest annual fall in dwelling values, down 6.1 over the last 12 months. Ross Greenwood, I don't know if anybody saw the news last night, Ross Greenwood was talking about actual practical examples of people losing money. Glenmore Park, there was a couple that bought last April for $670,000, had to resell now for $635,000. Divorce sale, obviously a bit of a speedy sale. They lost $35,000, but that's 5%. So the numbers are about right. A Balmain property he commented on, originally sold for 2.2, I think that was 18 months ago or 12 months ago, that resold for just over 2 million. So the loss there was 150,000. Percentage-wise, it was just over 6% as a loss. And then I was curious to see the other ones that he found was a $7,500 loss and a $5,000 loss and a $2,000 loss. So I don't know whether he couldn't find three, but he found two reasonable ones, but they were around about that 6% sort of mark. So the numbers for Sydney seem about right. Melbourne's an interesting one, and we'll get to that, but the last 12 months have just been 3.4% drop for Melbourne, so less than Sydney in the last 12 months. Obviously Hobart's still performing well in the last 12 months, and sleepy Adelaide and Brisbane, nothing much happening there. I have shown this slide a few times in the last seminars, but what I wanted to point out this time is the major drops that we're seeing across the country is in the most expensive properties. So this is the last 12 months. The black is the last 12 months decline. So the major drops in the last 12 months have been at the higher price brackets. What interested me this quarter is that the drops have started, the blue is this last quarter, the drops have started across the board. So while we're still getting larger declines at the larger end, we are now seeing the drops over the last quarter across the whole price bracket, that brings in your Glenmore Parks that Ross Greenwood's talking about and things like that. So the last quarter interested me to see the turnaround from actual growth in the middle of, like the actual growth for the year at that middle level price point has been quite strong, but in the last quarter we have actually seen it dip down.
So whatever growth you're getting, you're starting to see it now decline and come back to probably even 0%.
Yeah, so that's interesting, the last quarter effect. Sydney, we've spoken about the 6.1 drop over the 12 months. Last 3 months is just 1.5% drop in the last 3 months, so that's probably slowed up a little bit. Interestingly, 7.6 for houses has been the drop. There's been a larger drop in houses than there has been in units. So, I mean, I wonder whether that goes back to the last slide where more expensive properties are houses as opposed to the units. So the units are sitting more comfortably in the middle here at the moment. So we've seen a larger drop in that higher price point, meaning that the homes have probably dropped off a little bit more. Melbourne, the reason that I just wanted to show Melbourne is the values are lower in the last 12 months at 3.4, But the drops in Melbourne look like they've actually increased over the last quarter. The last quarter's actually fallen by 2.4% in Melbourne. So if we look at the Sydney, it was 1.5 in the last quarter. Melbourne's surpassed, or the fall in Melbourne has seemed to be larger in the last quarter, which is interesting. But overall, in the last 12 months, it's been less than Sydney, but the last quarter, it's accelerated its decline. Brisbane, I guess I keep showing Brisbane because I just want it to go. I want to show some good news, but it's done nothing. So, nothing. 0.1. Let's go in the right direction, Jeremy, at least.
I suppose where everything else is falling and Brisbane is holding its own, that's positive.
Yeah, it's a positive.
But it will gather momentum. It surely will gather momentum as things really start to come back in Sydney and Melbourne. You know, people will be chasing those better yields in the Brisbane market.
And in the last 12 months, it is just under 1% in terms of the growth in Brisbane. So on the positive side, it is going forward, but it is creeping slowly. Go. Articles yesterday prompted me to pop this one in, and it's basically the number of sales across the country have declined by 10%. So the number of actual transactions that are happening, settlements, has fallen by 10%. But if you look at Sydney, the actual number of sales is almost 20% down on where it was year on year. So 20% less properties being sold in Sydney is that whole effect of people either not wanting to come to terms with where the market is in Sydney, people trying to get a bargain, and sellers not wanting to let go. They were still looking for last year's prices. It has meant in Sydney, interestingly, that there's less properties coming on the market. So there is 6% fewer properties actually hitting the market in Sydney at the moment. So it's 6% down, but the actual number of properties on the market is over 20% higher. So what's happening is you've got fewer properties coming on each month, but they're not selling. So what you're getting is them starting to stack up on top of each other. So there's 20% more properties for sale now than there was this time last year.
What's the second table?
This is state, this is capitals.
Oh, okay.
Yeah, so, and to look at Brisbane as the comparison, Brisbane's pretty well the same year on year. So there's not really been a great effect in Brisbane either way. It's just neutral. Whereas Melbourne is similar to Sydney, similar story to Sydney. Fewer properties coming on the market, but more properties sitting on the market. Benefit, or a plus side, is we're seeing rents starting to trickle up. So we haven't seen a decline in rents in the last 12 months, except for Sydney. Sydney's come back a little bit. 1.3% rents have come back. But in general, we've seen some growth in rents. There was a bit of a fear that we were starting to see rents come back. Not so much. The data's saying that there's actually been, while not staggeringly good, except for Hobart, which just outperforms the market, but we're getting small growth in other rentals across the other capitals, which is great. Yields are starting to improve across the country, but I guess that's as your rents are trickling up and prices are coming back. That's improving yields, if that's something to go on. But it really means that property prices are falling. That's improving the yield side of things. Clearance rates. This is a little bit tricky to follow, but ultimately we're seeing clearance rates fall. I think last weekend Sydney was under 50%. So Sydney was at 48% in the last weekend. The same weekend last year was over 70%. So we've certainly seen a turnaround in Sydney.
It's not just the percentage, is it? The number of auctions was at only 700 or 600 on the weekend compared to almost 1,300 this time last year. So
and of the 1,300, 70% went.
Yes.
And only 48% of the 700 or 800
So it's
went.
dropped significantly.
Yeah. But interestingly, week on week, Brisbane actually had an increase in its clearance rates last week, if that means anything. So there's a bit of talk about clearance rates. There was the article that prompted me to put this in was the worst two words in real estate is passed in. So that was the article. That was the sky falling, passed in. So anyway, that's what's happening with clearance rates. But I guess it's more your traditional lower market, isn't it? where you get a bit of a boom market and you clear more, and then it's just come back to a reasonable sort of average, isn't it? Underpinning property, I guess you've got to look at that simple main driver, which is supply and demand. So when you look at housing demand, migration to Australia remains high, just coming off slightly now. But if you look at the quarters, the net overseas migration, we're still seeing 60,000 people migrate to Australia quarterly, and there's a natural growth of about 30-odd thousand as well. So you're talking 90,000 people Australia's growing by every quarter, so just under 400,000 annually, and they've all got to live somewhere. So there's got to be that demand for property must continue. What happens with prices and all of those types of things we can speculate on. We've got some great experts in the room, but supply and demand is got to be one key driver to property. So I wanted to just pop that one in.